Good afternoon, everyone. You're all very welcome to our US session open for Thursday, the 21st of September. So yesterday, we've had considerable volatility. It's something that we've been kind of speaking about very, very prominently in our community. We, of course, had the Fed interest rate meeting last night, a no rate increase. We saw that risk aversion really continue to play out. We saw the dollar rally into the close. We saw indices obviously turn lower. Today, of course, we had the Swiss National Bank and, of course, the Bank of England. And you only have to look at the volatility at 12 o'clock, where we saw a surprise no hike by the Bank of England. A very clear shift in its policy from just the previous meeting, which had 8 voting members out of 9 voting for the hike, to this time only having 4 of the 9 voting for the hike. And of course, as a result, we had a no rate increase. So the status quo, just kind of recapping on obviously the data today. Firstly, the first, and I suppose the most important thing this week, as I said, was the 6 central banks. We had obviously Norway, the Norges Bank, we had the Swiss National Bank, the Fed, Bank of England, the PBOC in China, and of course the Bank of Japan, which will be tonight, looking at that very, very closely in terms of the yield curve control. So in terms of that, just kind of recapping on this morning, as we said, for Thursday, Swiss central bank obviously opting to pause as well. So we're seeing 3 pauses consecutively by the Swiss, the Fed, and of course the Bank of England. We had that surprise pause by the Bank of England. You can see it there. A consensus today across the board was pretty much 7-2 in favor of voting for the increase. And of course, we only had 4 members voting, 5 opting to remain unchanged. And as a result, we saw interest rates remain at 5.25%. So as a direct result, how does that affect broader markets? Well, we know that when you look at interest rates, when central banks increase interest rates, there is more of a desire to hold the currency in question. So today, if we had to see 5.5, you would have been looking for more likelihood opportunity of slightly stronger sterling, slightly stronger pound. And of course, you would have liked to see most likely the FTSE moving lower. Now, because that didn't happen, we saw a very, very clear influx in terms of that pound weakness. Now, we did see the pound slide through the night by the back of the Fed interest rate last night. You can see it here, 7 o'clock. Saw it really kind of slide. And then, of course, today through Asia, through London, into 12 o'clock today, where we had the Bank of England, the pound continue to move lower. Now, we have halted a lot of those losses from initially around about 12 o'clock, 12:01, 12:02. We are about 25. We're about 32 points up off the lows in the cable. So a little bit of a pullback in the pound, but overall in the last 24 hours, we've seen that impetus into dollar continue to play out initially last night, but continued through the course of Asia and London open. And of course, we are seeing in the by consequential effect with that weaker pound, what has happened, FTSE? The FTSE has rallied. So if you look at the FTSE today, you'll see here this massive spike at 12 o'clock. We actually got up to 77.50 on the FTSE. Now, since then, it's held a lot of its bid. We've made short-term highs, short-term lows. We are working ourselves back into where the weekly highs of yesterday was at US session open, which was around about that 77.40, 77.50 level. And of course, today at 12 o'clock, we did spike into that before coming back lower. So we're seeing obviously weaker pound. We're seeing obviously the FTSE do quite well. If we look at the US session as well, you'll see that the indices is still very much on its derriere. And we talked about it last night, myself and Neil. I think we're both advocates for selling bias last night. We got the fundamentals. We got that selling around about kind of 8 o'clock. It was a little bit later last night in terms of the selling. But we saw that grind lower through the 4400s into obviously the taking of the lows yesterday, which was around about that 45.20. We continue to move lower. And you'll also see as well on the week, the S&Ps has pretty much returned to where we were trading at the tail end of August. So we had that influx into month end of August. We had the NFP highs. Again, no coincidence that the NFP tends to be at a high of the month. We saw it again in September up around 4,500. Since then, all the way back down, and that very clear selling unwinds that month-end rally that we saw in August. And the S&Ps is trading today in around about that 43.70, 43.80 level. on CFDs. And if I just check let me just check it here, folks, to see if I have it. The ES on the futures is trading just above 4,400. So we knew ES yesterday was around about 4,500s on the futures. It broke through 4,500s. It has just been a very, very clear straight line decline. US indices has been very, very, very much hit in the last 12, 16 hours or so as S&P's grinds lower. The NASDAQ, you will also see the NASDAQ grinding lower, and of course the Dow Jones. So all indices are very much on their derriere, as we like to say, on the back foot. And of course, NASDAQ back into this 14.8 handle. Again, very much similar to what we said in the S&Ps, trading at these kind of August lows where we had that, before we had that rally into August month end. And of course, Dow Jones not immune to the sell-off. We had a little bit of a spike, obviously, yesterday. But of course, that very, very quickly became undone into the close last night. And since then, the Dow Jones has continued to grind higher. So we were trading in this range here for the last week or two, in around that 34,600, 34,700, 800 region, that 200-point range. And we are now trading considerably below it. And really, since last night at 7 o'clock, the Dow Jones is down a mere modest kind of 500 to 600 points. So again, showing the intraday volatility in percentage terms, you're talking about 2% decline since the Fed meeting last night, which shows again the paramount importance of risk management, of discipline, doing your research above all else, particularly when you have high volatile data events, being aware of extreme volatility in market conditions, i.e. spreads, wider spreads, potential for slippage, and of course, understanding the broader sentiment in the markets. And as we said, indices in the back foot, that stronger dollar play is very much prevalent, and we're seeing that risk aversion play still continue to play out into today's market open. And you'll actually see yesterday, the dollar rally obviously was very, very much visible off the indices selling off, and we've come back up into this 105.50 again. And that's where the dollar is effectively holding itself into the 230 open, and you'll see that 105.70 level on the DXY is the yearly highs from March and from January of 2023. So the DXY is at its yearly highs. The indices are back to the August 25 lows before we saw that month-end rally. And we are seeing that risk aversion play being very, very prominent into obviously the 230, which is just a minute or so away. All right. Now, in terms of the intraday volatility, well, at this point in time, I think if you're looking to try and sell the S&Ps, you're probably a bit late to the party. I think it's now really evaluating the price action around this kind of 43.75, 43.80 level on the S&Ps. Of course, we've had that continued slide. It's been fairly clear, fairly concise in the indices this morning. It's just continued to grind lower. S&Ps, as we said, the NASDAQ has continued to grind lower, and the Dow Jones. So really now it's just about evaluating. I definitely wouldn't be trying to pooch or look for sells at these lower prices. I would like to see market stabilizing, allowing for a little bit of a retracement, allowing for a little bit of a counter trend move before we look for that next phase lower, because otherwise then you're getting into a position where you're selling after a fairly significant decline and you're selling at a potential low, which really that's counterproductive to the overall argument. So I suppose that the two tips today would be to evaluate price action. S&Ps 43.75s down into 43.50s, NASDAQ around that 14.8 handle. The Dow Jones similarly around this 34.350. It's getting a little bit of a pullback at this moment in time, just to see if there's any sort of retracements. Similarly as well with the dollar, we're seeing a lot of market reaction up here around the yearly highs, which we know is coming through at around about this 105.50 level, 105.70 level. So we're really looking for that to give us a little bit more clarity. The DXY is still holding underneath that area. We've become a little bit more consolidated this morning on the DXY in the likes of dollar yen, in the likes of Aussie dollar, in the likes of euro dollar. Cable, obviously much less so given the Bank of England interest rate. So it now becomes a case of evaluating the price action up here to see, do we start to see dollar actually pare back some of those gains that we saw last night from 7 o'clock into the close and intra-Asia session and working itself back into kind of 105, 104.75 as to where we traded at kind of 6, 7 o'clock last night into the FOMC meeting. So that would be kind of the few tips that I would give today from a price action perspective. In terms of actually the market profiles, looking to that now, on the day. If we look at the NASDAQ, firstly, you will see that there's not really much. You'll see a fairly wide range given the sell-off from last night. And on the NASDAQ, you will see that playing out pretty clearly. So we've obviously sold off into 15,000s. Market profile is sitting just underneath the 15,000 level, 14.9s. A lot of thin volume. You'll see it here on the volume profiles as well. Single, double, triple letter prints, which shows that there's a very clear trend directional bias. There's really not much volume there between, let's say, 14.8 and 14.9. So if we start to see the bottoms leveling out, most likely you're going to get a swift return back up into this probable area around 900s, 950s, 15,000 if you want to get to the psychological level. So that's what I'd be looking at there, just to see if there's any sort of recovery. Of course, if you look at the NAS at the minute, we're creating a little bit of a V bottom. But again, that will be the short-term focal point is up here around this little bit of a cluster this morning before we had that sell-off from 9 o'clock into 12 and into 1:30 where we're currently at this moment in time. If we look at the S&Ps, moving across to the S&Ps as well, just for a second. Let me just open this up quickly. You'll see it there as well. So obviously that clear break, 4,500s on futures. We were around about 45.50, 45.60 last night on CFDs. Clear breakdown into the 4,400s. Very thin volume last night. Single prints, very clear. A little bit of a pause around the profile level around 4,400s. And of course, what happened then this morning, we've had a similar move to that at the NASDAQ, breaking down, moving through the gears lower, and moving moderately to the downside. So that selling impetus is still very much there. If you were to look at the gap last night, there was a little bit of a gap play around 4,400 from cash price perspective. So I suppose that becomes the target point today of, right, can we see these indices start to pare back some of these losses? Can we see the bottom start to come through? And if we can do that, then you're looking at price action, like with the NASDAQ, returning up to the point of control on the day, which is around about 4,400. And as I said, on my exchange pricings, you've got a cash price open close gap from last night around 44.05, 44.06. So keep an eye on that one today. That's one to kind of keep an eye on. And then of course, lastly, then in the Dow Jones, similar to the other two, obviously very much bearish with the team of the day. Obviously risk aversion, the team of the day, with that stronger dollar. So we're effectively looking to see now, well, we've created a little bit of a V bottom. We're starting to see a little bit of consolidation of 230s into this 300. We've got point of control at 34,400. And that point of control is very much illustrated there, as we said, on the Dow Jones, which is coming in roughly speaking around about here. So you'd like to see maybe a deeper move higher than that. This is obviously where we were last night into the close around 450s. We are seeing a little bit of selling coming through initially in the open, but as I said, that first kind of 2, 3, 5, 15 minutes can be very choppy. So I would let the markets breathe, see where we are by 3 o'clock, and then determine, is it worth maybe looking at a counter trend movement, or have we made that short-term impulse for the next wave lower? And that's really the obstacle of the day so far. So as I said, indices, NAS, Dow Jones, obviously moving lower. 230, we've seen another little bit of selling coming through again, which is obviously again showing the fragility in the markets at the minute. Euro dollar has obviously very much cleared that 107 handle that was held last week. Still declining moderately through it. We're down around 106.50 at the minute. That was obviously a very clear sell-off last night. Bottoms coming in around 106.20. So that's really going to be the clue today, is to see, well, if the DXY starts to give way, if we start to see this area here around 105.40, 105.50 being broken, where we start to see a little bit of relief in the dollar, in the yield story, the bond story, then you might start to see the indices making some corrections. But at this moment in time, just be very careful, as indices are still very much bearish in the open. We've got fragility, as I said, in the markets. We're still seeing the dollar hold up relatively well above 105.50. And of course, if you look at the yields and the gold story as well, you'll see that very clearly, that obviously the yields was a massive play last night. We talk about the yields, we talk about the bonds last night into the FOMC, through the FOMC into the close. We have gone from 4.32% on the 10-year yield all the way up to nearly 5%. And in fact, today we actually got to 4.49%. If you want to look at that in a broader perspective, that's the highest point we've been since the COVID pandemic. It's also the highest point the 10-year yield has been since October 2007. And this, of course, as we know it, was the banking crisis and the financial collapse that took place in 2006 and 2007. So keep an eye on that one. At this point in time, you could very easily see the 10-year yield go to 5.2%. And I suppose that becomes the mandate now by the Fed to watch the yields, watch the bonds very, very closely, because of course that brings in additional recession fears into the background as well. All right. So that's pretty much where we are from today. We're still seeing the dollar hold up relatively well. First point, we're seeing the yield story obviously continue to explode to the upside. We're seeing the indices obviously very much on the downside. We're seeing obviously weaker pound off the back of the Bank of England interest hold or no hike. We're seeing the FTSE obviously hold up relatively well in Europe, with the DAX and the Euro stocks. If we have a quick look at them as well, DAX and Euro stocks has been fairly consolidated for the last number of weeks, but it's starting to turn lower again. That 15,500 now, I think, becomes the short-term benchmark. If that breaks, then you're probably going to see a little bit of a short-term circuit breaker in terms of sentiment to the downside. I think you're going to bring in another 2-3% additional declines on the DAX. You would expect the Euro stocks, because they're very, very closely correlated in terms of directional bias, you would expect the Euro stocks to be very, very similar. And that's really below kind of 4,200. And again, you have to look at the broader perspective, how high we are in the DAX, in the Euro stocks relative to yearly gains so far. And then last but not least, on gold, as we said earlier, gold came all the way up to this 40-45 handle, which was a nice little short-term liquidity grab up here, taking out the liquidity up around 50s, just underneath 50s, and all the way back down into the low teens again. So at this moment in time, keep an eye on gold. I think it's at this moment in time, gold has just been navigating between 1950s or high 40s and the 1900s. And now, given that we're working lower, I would suspect to keep an eye to see if there's any sort of market reaction down here, because at this point in time, gold does certainly look to be on the back foot again today. And even since 12 o'clock as well, gold is off another $10-12 from mid-morning. So we're definitely seeing that risk elevation continue to the downside. Risk aversion is very much there. Indices weakness is very much there, and that stronger dollar play is still very much there as well. All right. So as I said, keep an eye on those few points today. 3 o'clock, I think, is going to be a fairly good mandate for, we talk about it the last 2, 3, 4 weeks. That 3 o'clock time has been a very, very good identifier in terms of actually creating kind of a logic for the rest of the afternoon. And as I said, keep an eye on the price action very, very, very closely. All right.